Good morning, Seafree in Chicago with the morning grain comments. Markets are just pretty stable right now. A little change from yesterday's moves. And I think the top headlines right now is that, again, all week we've been trading, especially wheat and corn, the fact that the UN and various world leaders are trying to get the Russians to open up Ukraine exports to try to alleviate some of the food shortage crisis. President of Russia answered that they certainly would contribute to reducing world food shortage crisis, but all sanctions have to be lifted against Russia, which probably won't happen. Russia continues to escalate shelling in the eastern part of Ukraine. And there was a lot of conversation about maybe as much as 70 vessels are sitting there in Ukraine, either waiting to be exported or waiting to be loaded. And I think that right now the ports are still closed, mainly because of those waters are still mined. And I don't think Ukraine is going to pick up those mines in the fear of Russia amphibious attacks. The other headline was that yesterday we're kind of scratching our heads as why beans were up almost 50 cents and corn was down 10 cents during the trading session. Certainly the bean domestic basis is strong, both the crushers and exporters. And from August 1, we should see a record demand for U.S. Soybeans for both crush and export. But and then I think in the corn market, we've seen a heavy liquidation of the July $8 and $8.50 strike price corn call options. And we also see some people liquidating long positions as we get this corn crop planted and as the 2-week weather forecast looks pretty favorable for the corn crop. But I think at the end of the day, the biggest thing was one large hedge fund liquidated out of a big, long 2 corn, short 1 soybean position. And again, I think that hedge fund looking at better U.S. corn crop condition as the major reason for liquidating that position. Over in the wheat market, sharply lower start yesterday, and then we rallied. I think on the talk that there may not be an opening of the Ukraine exports. Also, the wheat market is going to have to focus probably on a lower U.S. hard red winter wheat crop. It's still raining in the northern plains, so I think the market has to adjust to a lower U.S. spring wheat crop and maybe even to a lower Canada crop. We also note that there's still some dryness in Europe, but looks like the dry areas could get a few showers next week. We're also watching pretty closely the dryness in the northeast China plains, although there is some precip in the forecast for next week. In western Argentina, wheat areas remain dry, and Argentina and Brazil both downgrading their corn crops. There was one estimate of the Brazil corn crop as low as 108 million tons, and yesterday Attaché lowered the India wheat crop to 99 million tons. So weather-wise in the U.S., still mostly favorable outlook for the U.S. Midwest over the next 2 weeks. And we'll just kind of watch and see how much more movement there is out of a long corn position and into a long soybean position, and maybe a little bottom picking in the wheat market. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day and have a wonderful long holiday weekend. And remember the veterans.